Hello, Christie Arkovich from Tampa, Florida. And today I'd like to talk about the harm to your credit report that is caused by delinquent student loans and what you can do to possibly qualify for a home purchase a bit earlier than the norm. The Expansion Act to the CARES Act, which was just past the end of March, it did an interesting thing. And basically what it did was that anyone with a federal loan that has had delinquencies reported on their credit, any negative credit reporting, any garnishments, wages or otherwise, as well as Social Security offsets and tax seizures, can have all that reversed. And it happens automatically. You don't actually have to do anything. When you have a FFEL loan, a Family Federal Education Loan, that's what happened, is that they accidentally went into default in the last year during COVID. They did not have the automatic forbearance that the CARES Act provided, and a lot of people accidentally got themselves in a heap of trouble. So the key to remember is that your credit score is the most important thing when trying to buy a home. And you usually have to have it above 700 in order to be eligible for anything. Now, there are some private lenders, non-conventional, non-conforming loans that will do loans even a day out of foreclosure and so forth when you have a higher down payment. And then what you could do is refinance that later when you qualify for FHA or VA or something like that. So you don't necessarily have to wait to buy a home if you have a higher down payment, and even if your credit score is low or you've recently had a bankruptcy or foreclosure. And that's the point I'd like to make. But essentially, this expansion to the CARES Act, it's going to correct a lot of people's credit reports. So if you find that student loans is the biggest barrier to you purchasing a home this year, and you happen to be behind on federal loans, that can easily be corrected. Now, the CARES Act expansion is mandated. So in other words, servicers have to do it. Debt collectors have to do it. Credit reporting agencies have to do it. And so it may take time. It probably won't take that long, but I think that after 2, 3, 4 weeks, we expect for that information to trickle down. And if a credit reporting agency, a CRA, any of the credit bureaus like TransUnion, Equifax, Experian, if they don't have it right and they still show that you are delinquent on a federal student loan during COVID, that is likely something that is a violation of the Fair Credit Reporting Act. And what the FCRA does is it provides damages. And it has a very interesting burden of proof, basically. And the creditor has to show maximum possible accuracy. You know how hard that is? That's a very tough standard to meet, but it's a very fair standard because this reporting system is for them, built by them, and everyone relies on that service to get credit, to qualify for credit cards, landlord, rentals, all that stuff. So if you happen to be delinquent on a federal student loan, reach out to us because that probably can be corrected under the Fair Credit Reporting Act. We can probably obtain damages and even get our attorney's fees paid via a claim against the other side. And then once that's resolved, you'll be able to buy a house. So thank you very much for tuning in, and take a look at further YouTube videos that we have and subscribe if you can. Thanks.